What if the big banks are all secretly dumping massive sums of money into the crypto market during this bear market? Well, this is the Bitcoin video that they don't want you to see, because there is no longer a doubt that the big money crowd is here and getting into crypto in a very big way. From asset managers like Blackrock to the big banks and a whole host of other big institutions. They are here and they are coming for your Bitcoin. A recent Fidelity survey of institutional investors back in October was quite revealing. A whopping 58% of those surveyed said that they already held crypto, and 78% said that they plan to buy more or start investing. Now, on average, these institutions said that in the next 2 to 5 years, they could see 29% of their portfolios allocated to crypto, assuming of course that the regulatory environment is favorable enough during that time. That's crazy, man. That's a huge amount of money. Then we had this Coinbase report that came out, and it said that at the end of Q3, roughly 25% of the 100 largest hedge funds in the world have accounts with Coinbase. We are talking about trillions of dollars here with these hedge funds. The top 100 hedge funds hold huge sums of money. Then of course there is BlackRock and BlackRock's Bitcoin fund. The world's largest asset manager launched their Bitcoin fund in August when Bitcoin was around $20,000. Since then, there has been no noise at all from BlackRock about Bitcoin. But my guess is that the BlackRock Bitcoin fund will be a black hole for Bitcoin. Big money just slowly but surely sucking Bitcoin into a shadowy web of darkness. Remember, BlackRock has $10 trillion in assets under management, and at the current market cap of Bitcoin, it would only require 0.3% of BlackRock's total assets under management to move over into Bitcoin in order to buy every single Bitcoin currently sitting on exchanges today. Then we had the big news that Fidelity is finally, after a very long wait, launching Bitcoin trading for retail customers. Fidelity has 34 million customers and $4.5 trillion of assets under management. So again, only like 0.6% of Fidelity's total assets under management moving over to Bitcoin would buy every single Bitcoin sitting on exchanges right now if that money were to get into BTC. By the way, asset management giant Charles Schwab recently did a survey, and nearly half of Gen Z and millennial investors say that they want Bitcoin as an option to invest in for their retirement accounts. Now, a recent report also highlighted that Gen X is set to inherit $29.6 trillion, and millennials will be set to inherit $27.4 trillion, with $14 trillion of that expected to be handed over to these groups by around 2030. Now, for reference, that's about 45 Bitcoin market caps combined. Or if you want to think of it like this, then only 0.2% of that $14 trillion would buy, again, every single Bitcoin currently sitting on exchanges. Now, before telling you about the investment banks, the family offices, and yes, the venture capital money still flooding into this space and just what they are doing, I wanted to let you know about my weekly crypto investor newsletter. It's called Wealth Mastery. It's absolutely jam-packed full of alpha on altcoins and airdrops and NFTs and DeFi tutorials, market analysis, and much more. Join our 50,000 weekly readers by signing up for free using the link down below in the description. Now let's talk about the big commercial and the big investment banks that are making crypto plays. And this is just recent news, right? If we went to every story, we'd be here for hours. But let's talk about BNY Mellon. This is one of the biggest investment banks in the world. Back in October, they launched a digital asset custody platform for their wealthy clients. They did that in a bear market. They launched a custody service for their wealthy clients in a bear market. To be clear, they would not have done that if the demand was not there. Or what about this banger from JP Morgan? They just got approval for the launch of their crypto wallet. Again, that is being done in response to demand from their customers for access to these crypto assets through a trusted intermediary like JP Morgan. This is why, in spite of the CEO bashing Bitcoin previously, at JP Morgan has been quick to hop on board the crypto train by offering trading services for clients, launching their own blockchain, launching their own stablecoin, and now a cryptocurrency wallet. As always, watch what they do, not what they say. And what about family offices? Well, those are the private wealth management firms that manage rich families' money. Currently, they represent around $6 trillion in global assets, and globally, about 25% of these family offices already have some exposure to cryptocurrencies, but 77% of firms surveyed said they're actively looking at investing in crypto. And what better time than during the middle of a bear market? And again, just a tiny fraction of that money could buy the entire supply of all Bitcoin currently sitting on exchanges. So many groups wanting Bitcoin, so little Bitcoin. So many new inroads are being built for capital to enter into the markets. The next bull market, when it comes, will be so much bigger than the last one for the plain and simple reason that it has never been easier to buy and to store Bitcoin at a wide range of different places. And of course, Ethereum, because most of these big stories also include Ethereum. Not dog coins though, not monkey pictures yet, sometimes, but not usually. The big two though, BTC and ETH, they usually go hand in hand when these services are offered. And finally, I want to mention the simple reality that venture capital still here, still running strong in crypto, money still coming into the space. The return potential is just too damn big to ignore for venture capitalists. The upside's crazy. Over $1 billion was raised just in November for crypto startups. The next generation of big things are being incubated right now. Networks like Sui and Celestia, which people haven't heard yet, but will be the next big things. Money is still flooding into the space, and while maybe it has slowed down a little bit throughout the year, it has not stopped, not by a long shot. Crypto is not going anywhere. And while we all need to lick our wounds after the blowups at FTX and BlockFi and the crazy price declines this year, the truth is the market will build back stronger than ever. Adoption is continuing to grow in spite of the bear market. And while it can be easy to lose sight of the big picture in the middle of all this craziness, it's rarely profitable to lose sight of that big picture. Oh, and feel free to keep all this information in mind when the media tells you for the 500th time that crypto is dead, because it's not. In fact, far from it. Otherwise, big money wouldn't be investing in it. Okay, that's it. Subscribe now. See you next time.